Hi, welcome to the video. Right now it's 3:38 p.m. and I'm going to walk you through all of my options and then also talk about how I close them or how I close positions in general. And this is live. This is actually on my TD Ameritrade. You can see there's not that many positions that are expiring today. Now, what that means, if you're unfamiliar with options, when you create an options position, whether you're buying an option or selling an option, you have to select a strike price, but you also have to select an expiration date. And a lot of these expiration dates often fall on Fridays. So tomorrow they expire, and there are two things that could happen. Either they are expiring in the money or they are out of the money. So for example, let's go to this Palantir put. So what I did here actually was I sold a put at a $22 strike price. This means that if Palantir is even 1 cent above the $22 strike price, I get to keep this premium because I'm selling the right to my Palantir. Meaning if somebody were to, if Palantir were to fall below the $22 strike price, I would still be forced to buy someone else's shares at $22. But because today Palantir is actually closing in on $27, this is way above my strike price, and I'm not beholden to the person that bought the put, the person I sold this put to. And the premium I got was $1 per share, so $100 total. So you can see here that my gain percentage, because it's nearing the expiration date, it's nearing expiry in 20 minutes. This position is going to be closed. You can see that I have gained almost 100% of this profit. Now, usually what I would recommend most people do is don't just wait until expiration, because even though Palantir is at $27 right now, way above this strike price, it's not impossible that it could drop all the way down. And if it were to drop all the way down and all of a sudden you're forced to buy 100 shares at $22, which would mean you'd have to pay $2,200, that could be something you're not prepared for. And if you're not prepared for it, it could be annoying if you don't have money, or it could really hurt. Like imagine if you sold a put on Tesla, which I have here, and imagine if it all of a sudden it randomly Tesla stock tanked, and let's just imagine Tesla this put was expiring today. If it tanked below this strike price, I would be forced to buy 100 shares of Tesla, and 100 times $690 per share. That would be a $69,000 bill that I'd have to pay for. Now, of course, I could immediately sell it, but who knows what the price would be when I want to sell it. So that's why I always recommend you close your positions even before the market closes. Now with Palantir, it's a little bit different. With Palantir, it's not that expensive. So if it were really to drop, which is unlikely, all the way down to $20 or $18, and I'm forced to overpay for it at this price, that's okay. I'll be fine. And also Palantir is a company that I believe in, so I don't mind holding these shares. And I'm also doing a strategy called the wheel, meaning that when it's I'm selling puts, and then once my puts are tested and I'm forced to buy, then I start selling calls. And here you can see that I actually have some shares that are getting called away. So because I sold a call, that means somebody else bought a call. Now the person that bought a call reserves the right to buy my shares at $26 upon today, June 25th. And right now, Palantir is at $26.88. So even though it's more expensive because they bought the call, they can buy it at this slightly cheaper price. What this means here, you can see the quantity, it says negative, right? That means I sold it. So today or at market close, as long as Palantir closes above $26, my shares are going to get, they're going to get bought by somebody else. So I'm going to lose 200 shares. But what did I get? Now that I've been forced to sell these shares, I got this premium, which is average cost per share, about 40 cents per share, so $40 total, $80. Now you can see the gain is negative. The gain is negative because the value of Palantir is higher than the premium that I got. Because the value of Palantir is close to $27, had I not sold this call, could just sell Palantir at $27, and I would be technically making a bit more money than I am making now just by getting this premium and being forced to sell at this lower price. But that's okay because I'm willing. So even though these are getting called away, you can see that I have puts already in place, meaning if Palantir were to drop below a certain level, I would be able to get these shares back and also at a cheaper rate because I'm getting premium. So basically, you're just selling puts and you're selling calls. If your shares get called away, you sell more aggressive puts until you're forced to buy them back. Once you have shares back in your account, then you start selling puts again. And that's basically it. And I guess for the rest of this video, I'll just walk you through a couple of my other positions because I haven't done that in a while. Also, real quick, I'll see if anybody is watching. I don't think there's anybody watching right now. I have a like, but yeah, I'll just continue. So here I have some BNGO positions. This is a biotech company. I'm not going to talk too much about the actual companies. I'm just going to talk more about the position. So these are puts, meaning that if the price of BNGO falls below $7 or it falls below $8, then I'll be forced to buy it. But as of today, let's check out the stock price of BNGO. It's about 742, meaning this put right here, if the expiry date were to be today, then I would be forced to buy 100 shares at $8. But it's not, because at 742, yeah, I wouldn't be forced to buy shares. But and yeah, I apologize. I meant because the date, it's not its expiration date yet. It's fine. These are both positive because I got a pretty nice premium for it. Clover, I sold a put. This is completely in the money. This also, I want some shares of Clover, so that's why I'm not closing it now. But if you wanted to close it preemptively, which is what I recommend, you hover over it, you go buy, and then you change your order type is fine. You want to limit. Generally, I like to close with about $5. So I would close with 0.05, review order, and this would close it out. And one thing that TD Ameritrade does that I really like is that any trade that takes $5 or less to close, they don't charge a commission, versus if it took, let's say, $6 to close, then you see here they would charge a 65-cent commission. And this is really to encourage you to close your positions. They want you to close your positions because they know a lot of newbie traders are going to get catch off guard when they see, oh, I'm almost at 100%. This position is fine. I don't need to manage it. But then after hours, the stock moves a lot, and all of a sudden you're liable to buy all these shares. Here I have two coin positions. This is Coinbase. This is a company I'm very, very bullish on, and I sold some puts a while back. So again, there's a pattern. These are all companies I'm generally bullish on, meaning in the worst case scenario, if this stock were to really tank, I would pay a little bit more for these shares, but that's okay because I can hold them long term. So here you can see one of my puts is technically up, even though it's down today. If you look at the Bitcoin markets, they are down a lot. Coin fluctuates a lot. So this might scare some people, but it doesn't really scare me because just within one day, my day gain could swing hundreds of dollars. So here we have DNG. This is Dollar General. At one point, this was up a lot, and this is definitely, I would consider a value stock. But yeah, it hasn't been doing well recently. I should probably think of an exit plan. This call right now, yeah, it's not doing well. But yeah, I need to do more research. I don't want to just blabber on about something that I'm not sure about at the moment. NEE is like a solar energy type company or wind powered company. This is a leap. So even though it's down a lot right now, leap means I have 2 years for this to come back up. This is something I'm also very, very bullish on. So I have 3 leaps here. So again, because it's not negative, these are calls or positions I actually bought. And then if it's negative, that means these are positions I sold. UiPath. This is a robotics AI company that Kathy Wood is very bullish on. I was looking at the technical analysis. It seemed to have hit a bottom, so I sold a put. and that seems to be doing pretty well. You know what? I'm actually going to try to close this out. So generally, when I sell options, I always try to take profit at 50%. For me, that allows me to take profit more consistently, but also that really catches the fluctuations, because even though we're up today, it's a really good chance on Monday path it's going to be down again, and I wouldn't be at 50% profit. I could be at 40 or 30% profit. This way, I get 50% profit. I get some of my money or collateral back. Because remember, even though, selling this, I got paid $360, now I'm technically on the hook for $6,500, because your brokerage, they don't want to be left holding the bag any more than you do. So the moment you sell puts like this, and especially if you don't have margin, they're going to make sure you have $6,500 in case this position goes belly up and the stock tanks. They're going to make sure you have money to buy it. So whenever you have positions open, that's just held somewhere. Somehow, somewhere, it's going to be held. So once you get out of your positions, you have more money again to open new trades. And here are all of my Palantirs. You can see I have a lot of Palantir plays, and you see these leaps. Actually, yeah, here we go. We have a bunch of leaps here, and this looks very, very bad. It's very, very negative. I didn't do a very good job of finding the right time to buy these leaps. I bought these when Palantir was probably in the mid 30s, and there's this euphoria about Palantir, and we all thought that it was going to the moon for some reason. I was still pretty early on in my trading when I bought these leaps. So I haven't closed them yet. So you can see here, this is what I'm bought them for, and this is the value right now. So like this one, I'm under a lot. I bought it for $1,300, and now it's only worth $400. These are a little bit better. I bought them when Palantir was a little bit lower. And I'm not selling these because Palantir has been flat for quite a while. I still believe within the year these are going to come up at some point. And one thing I did that I think was actually smart was that these have much longer expiration dates. There are 2 leaps over here. These are just these are expiring next year. So I have time. But I should also consider my exit plan, because if by January 21st, 2022, Palantir is, let's say, at $34, I would still lose all of what I paid for, and that would be bad. That's another thing. Don't just feel like because you already lost this much money, it's okay to lose the rest. $200 is still $200. $200 right now, if I were to sell it, is still better than $0. So have an exit plan. Don't just buy these things willy-nilly like I did at the time. Here I have a Peloton call. I also bought this call at a very, very bad time. Yeah, this is great. I mean, it's embarrassing to show how many stupid mistakes I make, but I know other people are making the same things, especially when you're buying into the hype. And it's a lesson for me every time I look at it to not just ride this hype train. And there's a lot of examples of that, but there's also examples of good trades somewhere out there. Here we have SSYS. It's the 3D printing company, Takeda Pharmaceuticals. And here, finally, the big cojones, the Tesla positions. Here I have 2 calls that I sold and 2 puts that I sold, and this is essentially what you would call a strangle. So no matter which way, up or down Tesla goes, I technically would be profiting. Today's Tesla is down a lot, so you can see my call side, I've made some unrealized gains, and on my put side, because it's going lower, it's testing these strikes a little bit more, then I lost some money here. And yeah, you can see these premiums are really big. This I got $10,000 for, this I got $12,000 for, and this is great. This makes me feel good when I look at it. It puts me in a good mood. Unfortunately, this is not all pure profit. This is actually something I rolled from when Tesla really just tanked. It was in the low 600s, and I had to roll it for this much if I didn't want to take a loss. This is kind of a more advanced move, and it takes a little bit more emotional strength because it's a little bit risky, because I sold this put when Tesla was in the low 600s in order to get this super juicy premium. Now, recently, let's look at the Tesla's price. Tesla has come up. Let's look at this past week. Look at this. It was just in the lower 600s less than a week ago, and now it was almost touched 700, and now it seems to be settling around the 670s. So this gamble has really, really paid off, at least for now. And that's what I like about Strangles. It's that even if we're to come back lower, because I have two on the call side, I'm also making money on the call side. But I would caution against selling too many calls on certain growth stocks, even puts. For me, it's worth it because Tesla's volatility is still pretty high, and I am super bullish on Tesla. So generally, I want to sell more puts than calls. It was really, really scary when I sold a call and Tesla just kept shooting up, because what I definitely don't want is Tesla to one day be at 800 and I sold a 730 call, meaning I would have to sell Tesla at $730 per share, even though it's worth $800. And then that's not the worst thing. It's that I would also be hit with a huge, huge tax bill. Because imagine taking, if I'm selling 100 shares at $730 per share, that's $73,000 revenue. And at my cost basis, which is very, very low, I'd be paying taxes on 50 or $60,000 worth of profit. And that's like $10,000 or $15,000 straight out of my pocket after tax. And yeah, that would hurt a lot. But did I see space? Some of the calls are up 20,000% today. You know what? I actually have. This is actually one of my greatest. This is what happens when you trade options. I actually had 200 shares of space, and I sold calls on it when it was 30 some dollars, and I've been selling calls and puts on it all the time, and it totally got called away, and I missed this move completely, because that's the price you pay when you sell options. The shares got called away, and I couldn't experience any of this benefit. And I'll be honest, it really, really hurts, because I had been holding space for a long time. I held it through when it really, really tanked as well. Here, I'll actually show you. This is my account. This is how much I'm still up, which I'm very grateful for, because it was a really bloody couple of months. So I'm still up $28,000, but you can see what happened with me and space. It's Virgin Galactic, right? Look at how much money I lost right here, because I kept rolling puts, and because it kept dropping. Do you guys remember what happened to space? So I bought space like here. Here is when I actually had space, and I rode it all the way up, and I was making some money, and it came all the way down. I was still selling puts, and then my puts got tested, and I would roll them. My puts got tested, I would roll them. And then finally, recently, around here, I started selling calls again, because I think I became a better trader. I couldn't just I was so lucky last year that I could just keep selling puts and making money. But here's when I realized, like, hey, I need to neutralize my strategy a bit more, because generally the market is fairly neutral. And the moment I started selling calls, space shot up, and I lost all of my shares. So that really hurt, because had I still held on to space, that would be a net up unrealized gain of $4,000 or $5,000. And yeah, look at that. This is really painful if I think about it. But you can't win them all. Same thing has happened with Lemonade. Lemonade, I was definitely selling puts on for a long time, but I kind of gave up recently just because it hurt too much. I lost too much money to Lemonade. Just in this downfall, I kept selling puts, I kept rolling, and then now it's slowly coming back up again. But yeah, you can see here I lost over almost $3,000 trading Virgin. So it left a bad taste in my mouth, and I was always watching Virgin. Even recently, I was looking for it to drop and finding a better opportunity to sell a put again, but it just never came. It just shot up like it has. Every day here, I was watching space. I was like, okay, if it just dropped like 10-20%, I'm going to sell a put, because I'm still bullish on the company. I still like the company a lot. And it never happened, and then this happened, and now, yeah, I feel sad now that I'm talking about it. So thanks for bringing that up. But yeah, basically it. So we're getting closer and closer to 4. So you can see that these were at 99%, but now these are getting higher, because the possibility that Palantir would drop this low again is getting more and more slim, and you can see it keeps updating. I hate that this pops up. But as you can see, you don't really need any super fancy tools or trackers. I mean, they probably help a lot, but recently I've just been trading directly on TD Ameritrade, and I do some basic DD here. And that's basically it. I know I haven't done one of these options videos in a while, so I just wanted to be transparent, give you an update on how I'm doing. And I'll try to do a little bit more of these because this is what I spend a majority of my time on. It's trading options, and it's still profitable, even though it's can be very painful sometimes. But yeah, that's basically it. Hope that was helpful. Please like and subscribe if you enjoyed that, and I'll see you guys soon.